Because what you, the unsung heroes in the wastewater industry, do matters. Join me, Suzan Chin-Taylor, the DooDoo Diva, a longtime veteran of the wastewater, trenchless, and civil infrastructure industry each week as I deliver industry know-how from industry pros who know how. Whether you want to learn about the latest trends in technology, training and retaining great talent, sales and marketing, leadership and growth, or simply how to be more efficient, productive, or profitable, this podcast is for you. Let's dive in. Well, hello, everybody, and welcome to this week's episode of the DooDoo Diva Smells Like Money podcast. We are now continuing our visit with Steve Selengut on part 2 of our financial health and wellness for wastewater industry pros. So welcome back, Steve.
Thank you. Thank you for having me back.
And so today, our part 2, we're going to be talking about exit strategies. And most of us think of that for, business owners and entrepreneurs, but we also need to take a look at exit strategies if you're an employee. And so with that, Steve, I'm going to let you steer the ship on this one as what you think are some important things that we have to consider for planning, because all of us exit our careers, whether we're an owner or an employee at some point. And so what are those things? We don't want to wait until the last minute. What are some of those things that we need to start planning for now? And how far in advance as business owners, and then follow up with employees? And so with that, I'll let you lead us down that garden.
I've actually experienced both. So the first time, of course, was leaving my job in New York City and starting a business of my own.
Mm-hmm.
And the second one was, 45 years later, when I was at the point where I said, okay, we've got an offer to sell our business.
Okay.
Am I ready? So one was, the first thing was, how can I get out of this commuting to New York? I can't stand it. The only positive of the entire 12 years I worked for that company was that the commuting allowed me to get my master's degree in night courses, and I'd study on the bus, but that was it. I wasn't making a lot of money. I wasn't getting the advancement I thought I should have. I finally got to the position where I got to work in the pension investment department at this life insurance company I was working for. And it was about the same time that I got my my savings. My dad had put, kids get to be 25, you give them the money you didn't spend on their education or whatever, and what they had from odd jobs and stuff. And I was fortunate that I was from a background where that could be done. And I did have that chunk of money that was handed to me. So I was starting to invest at 25, and I was really getting into it and liking it and enjoying it. I was working in the pension investment department of this super huge money manager. Life insurance companies are very big pensions and profit sharing plans and stuff. They manage the money on a lot of those. And I had contact with the money managers themselves in the job function that I was in. I went all over the country with these guys. And I talked about, they had in their programs, I was a participant in these investment programs myself. And I used them to design my own, the types of securities, the diversification. I emphasized two things that they didn't, and I'll explain it. I emphasized income because I thought it was a good security thing. And most of their stocks and things did pay income, but they didn't take profits. And I had to find out why they didn't take profits. To me, it made sense to take profits. I charted all these things I owned, and I saw the volatility and the ups and downs of the markets. And I said, damn, you could buy it here and sell it there 10, 20 times a year. You could trade the same security. Right. So I was checking out on Boeing. We were actually going to Boeing, and I was looking at, and I said, you guys have $1 gazillion invested in Boeing stock, It's at millions of dollars in profit. It's not paying a big dividend. Why don't you sell it, take the profits and reinvest it in something else, maybe for more income? And he said, well, the fact of investment life at this level is simple. We invest such huge amounts of money that we can really make a difference in the price of the company's stock. And Boeing is a big insurance client of ours, and they like us to have this much of their stock in our investment portfolios. So this huge light bulb goes off in my head. And I say, okay, it's as much politics involved here as there is economics. You know,
Mm.
what if Boeing fires my company and they say, huh, we don't have to, we'll take our profits and run, get the hell out of here, you know? All of a sudden they have a big enough stake that that might impact it and it might influence others to sell it, blah, blah, blah. And, the Boeing stock goes down. So anyway, I said, this is, and we, we have such a huge industry here that this type of politics pretty much takes over the price movement to a certain extent. That's when I came up with the idea of setting profit-taking targets. So that would never happen to me. I set a reasonable target and I'd sell everything. So with that and with the other good parts of learning how to invest really by working with them, I grew my portfolio and my income produced by that portfolio to such an extent that I woke up one day saying, I really don't have to do this anymore. I'm making
Mm.
4 or 5 times my salary, you know, and if I don't work there, I don't have to have these fancy suits and I don't have to get on a bus every morning and do all that commie, and so I could probably save 25% of my expenses by not going there. And I know at least 3 or 4 people who, when they see my income figures, are going to want to let me help them. So I made up my decision and I exited the company
Mm.
and I came home and we were actually building a house at the time.
Okay.
I told my wife, well, we're going to have to live off my investment income for a few months because I'm no longer working there and I'm starting a business. And she fortunately had a good job at the time, so it really didn't matter. She was making more than I was. I was working in New York for a big company, and she was working locally for a law firm, and she was making more than me, which I was very proud of her.
Wow.
But that's how people at my level weren't really paid very well. But anyway, so I was doing an exit plan at that age. When I was 30, I was 34, right? 34, I don't know, something like that. And I did. I went out and I talked to these couple people. My dentist, this guy owned a restaurant out in Long Island, you know, and I said to them, look, guys, this is what I've done. I'm making this amount of money on this amount of money invested, and I've been doing it. You can see my statements. You've been doing it for years. Let me do that for you. And and they agreed. So as soon as I got that, then I went to my broker and I asked her, okay, I'm going to start managing money for other people. What do I got to do now? How do I get licensed to do this? So I had to do all that. So I had to prepare. I had to get my licenses
Right.
and that. And I had to start thinking about things like marketing, thinking about how do I go and show up? What do I need to convince people that I don't know that I can do this? What kind of numbers do I need? What kind of history? So I had to go back and get all my statements put together and show how my money had grown over time, develop a 5-year history. So I had to do all that. So that's the preparation just to leave a job, basically, to get together and say, okay, I don't want to do that. I don't like this job anymore. I'm not going anywhere. So that's the idea. You have to prepare to exit. I exited a little prematurely. I was lucky. I was financially
Hmm.
sound and I could afford, a few months of no additional income. Most
Right.
people would have done all that I did after I left before. get that stuff. If you're going to have to get a license, figure out how you're going to have to do it. If you're going to have to get friends to support you at first, even if it's family. A lot of people in the advisory business and in insurance business, they always start with their family first, right? I didn't. I started with my friends first. And then and then my next broker and I saw the enormity of what we were doing, how important it was. Even then, the focus wasn't on income, you know. So we started doing trade shows, and I started getting booked on radio programs. Did you ever hear of Adrienne Berg? She was a
That
she
name
was
sounds
a
familiar, but
radio broadcaster years and years ago. I'm sure she's long dead now, but that's one of the first persons that I interviewed with on the radio. Um, so anyway, so that's the one. As an employee, if you want to separate, you don't just go in there and tell your boss where to go and walk out the door. You know, you've got to be able to maintain your same situation, you
Mhm.
know. So you have to plan ahead. Everything requires planning. And if I were doing it today, I would have done it differently. I would have had the
Mm.
license already. You know, I would have had the license before I left. I would have made some other contacts and so on. But that's one way of leaving a position. You have to prepare for it. So then you take the story and you say, okay, so what did he do next? So I ran an investment management business for 44 years, and I took it from maybe the $50,000 that these two guys put with me back in 1979 when I started the business. And I started it as a corporation. I had the corporation thing, so I had all my expenses. When you're in a service business, that's a good thing to do because everything you do, particularly if it's in the financial area, supports that. So I did that. I got all that done, and back in just not so long ago, in May of 2023, we're hitting 77, 78. My I am my wife and the broker I'm still with, like 74, and we're saying, it's time to pass this on to the younger folk, So
Mhm.
so we trained people to do what I do. We knew we had to do that. We trained people to do what I do. We documented what I did. We worked for this Pittsburgh outfit, and they were being taken over by yet another bigger outfit.
Mhm.
And he was in conversations of how it was going to impact our firm and our relationship. And the guys that were buying out the company asked him if he was interested in getting bought out. You know, very simply, they saw our ages, and they asked, and they made us an offer that we couldn't refuse.
Mm.
You know, so you get this offer that you can't refuse, but what if, what if it's a two-part or a three-part payment, and you don't have the income to only get the one third of your payment, and with no salary and no income from managing other people's money anymore, you say, "Whoa, I'll be going backwards for a year." You know,
Right.
so the lesson is as soon as you can in your career, once you got something, if you're an entrepreneur, in order to be an entrepreneur, you got to love what you're doing.
Oh, absolutely. Yeah.
Okay. And you don't know when that love is going to stop. And it never did for me. But you have to realize it in practical sense that you're going to have to get out of that somehow and give it to somebody else. Hopefully you'll be able to sell it, but maybe you won't be able to sell it for a big number. I got a big number. So what you have to do is you have to start the steps of replacing your income. I was managing $110 million at the end. And I wasn't getting the whole fee, but the normal fee for financial advisors is 1% to 1.5 thing. In my case, I had to split that with two other entities, still it turns out to be a lot of money. Okay. And if you don't have the your infrastructure, your financial infrastructure, your own personal portfolios in place to generate that replacement, that income, at least most of it, then you're going to struggle with a payout that's going to put restrictions on you and your behavior. I can't go in competition. There are, all kinds of things that you can't do when you sell, and your money, your cash flow is going to stop. Your cash flow is going to stop. So you got to start early, and not just shoot for the sky and invest in, hope you're going to make a big killing on securities, but put money in places that the only thing that's necessary, that it's producing money. And in today's environment, with interest rates where they are and where they've been, and with vehicles like closed-end funds that I write about in the book, you can be $1 million owner, entrepreneur, earning seven figures, and invest in tax-free funds, closed-end funds that are yielding 6% tax-free, and build this portfolio so it's there waiting for you when you decide to pull the trigger and sell your company. You can do the same thing with more exotic investments, with still be in the stock market, still be in the bond market and stuff, but you have all kinds of possibilities to develop another stream of income other than your business practice. And that's what I had in place.
Because I would say, if you rely, you've got to hope that you're going to get what you want for the business. And will it be a lump, like you were saying, will it be a lump sum?
Yeah.
Or will it be a really nice offer, but it's going to be payment over an extended period of time?
Right. With contingencies.
There's a lot of contingencies, so a lot of things it's almost like having a plan B, because things may not happen the way you want. Like you were saying, okay, in a perfect world, but most of the time things aren't a perfect world scenario, or what you think your business is worth may not be what somebody else thinks it's worth.
Right.
And so being able to replace that income so that you're not basically dying in your chair at the office because you couldn't leave. You couldn't leave because you didn't have enough to live on.
Right. And how have you been living? I mean, when I was the last 10 years, my wife and I traveled all over the world. I mean, we've been taking three major trips a year. And she said, I'm not booking anything. I'm not booking anything. And I took my portfolio out. Every month I'd show, here, look, this is the projected income from what we have now in place. Okay. This is the projected income. I know next year we get the rest of the payout, but right now, this is our projected income. We can still travel. We can still take care of the kids' educations, the grandkids. We can still do what we're doing now. We don't have to change. And that's where you want to be. And not only does that give you the preparation for when you sell something you love, it also gives you insurance if something goes wrong. What if what if in your business you get a regulatory thing that just drives you crazy? You can't operate. It's not the way you do business anymore. You don't love it anymore. All of a sudden that can happen. So you got to prepare yourself. So either way, as an employee or as a business owner, you've got to have that income stream that you can depend on as that insurance, that backup, that you're going to be all right no matter what happens in your future.
Well, thank you, Steve. And so with that, if people would like to know more about what you have done, maybe connect with you, find out about your book, which is on Amazon, by the way, to connect with you, to talk about what should I do next, Steve? how can they get a hold of you?
They can, go to my website, which is theincomecoach.net, and all my contact information is in the book. So if they buy Retirement Money Secrets, which is precisely the type of, it's a book really wasn't literally designed for this particular problem, but it certainly is suitable to help you plan for, an exit strategy. That you can get in touch with me via that book as well.
All right. Well, thank you. And that's a perfect segue, because now we're going to dive in on our next episode, in the last part in our series, some of the DIY secrets that Steve shares in his book. And so thank you for listening. And until next time, keep it flowing. Be sure to subscribe to the show so you'll never miss an episode. If you're an industry expert and would like to be considered as a guest on the show, click the Be a Podcast guest link below in the show notes for more information. Thanks again for joining me, the DooDoo Diva, on this week's episode of the Smells Like Money podcast.